Yo, what's up? Welcome back to the Coinist Podcast. I'm the host, Luke. In today's episode, I speak with Travis Kling and Hans. They both work at Ikigai Fund, and we talk about a ton of things related to network value, how much network activity is happening. You might know them as on-chain metrics, maybe some charts you're familiar with, or some concepts you're familiar with, like hash power, whether or not that's leading or lagging price, what it can tell you about investors and the infrastructure here happening in Bitcoin, and then also things like realized cap or days destroyed and some charts you might not be as familiar with. It's important for traders, but it's also becoming increasingly important for hodlers and for holders, right? To understand those with a longer term perspective. What is the health of the network? What can we learn from this new set of quantitative data that does tell a fundamental story? We dive into all that with Travis and with Hans, who specializes in this kind of thing. Fascinating conversation. I have one tip or recommendation. If you listen to this on iTunes or you listen to this on Spotify, first off, appreciate you guys for tuning in every single week. But if you listen there and you're able to watch this one on YouTube, I do recommend it because we talk about a lot of charts and in some episodes, I don't reference any charts. So it doesn't matter if you listen to audio, you'll still get a ton of value, but I think you're really going to enjoy if you can watch this one so you can follow along when we are talking about a chart. You might get some more value that way. Couple exciting things coming up past this episode. Obviously, more shows. One coming out with Tom Shaughnessy of Delphi. A lot more. I have a ton of things planned. I'm so excited to bring it all to you guys. End of the month, there's a conference, Blockchain Week in San Francisco. I'm going to be hosting a panel with Nick Carter and a few other people. Who else is it? Tom Lee over at Fundstrat. It's going to be a fantastic panel. I don't want to release all the details. I'm not sure if all that's public. I hope I don't even get in trouble for saying that. That panel is going to be great. If you're at Blockchain Week in San Francisco, look forward to seeing you, reconnecting, or meeting you if we haven't met before. Also, at the end of the month, Bybit is putting on a little party or conference or get-together at the World CryptoCon. So if you're in Vegas end of the month, I know there's quite a few of you heading to Vegas for that World CryptoCon that happens every single year. I'll see you there. Before we get into this episode, I have a message from those people. That's Bybit. Bybit Exchange, who sponsors this show, makes it possible every single week. If you do tune in every single week and you haven't signed up to Bybit yet, I don't know what you're doing. I literally give you free $10 just for signing up using my link right below this video. That's trading.bybit.com/venturecoinist. So you can remember the URL or pop over to YouTube. Link is right below this video. I was watching Bloomberg last week, or someone tweeted the segment, and I watched the clip. They looked at top 5 derivatives exchanges in crypto and by volume, right? And BitMEX is up there, Huobi's up there, and OKX and CoinFlex and Bybit were actually up there. CoinFlex I had on as a show a while back, but Bybit, it's crazy to see these new exchanges climbing the ranks so fast. Bybit continues to solve those problems that traders want fixed, like overload or like not having customer support or new contracts. XRP is on a tear this month, so you can trade XRP to the upside, to the downside. All that is happening on Bybit, one of my favorite exchanges. Absolute pleasure to use and to work with them. Easy to use. I mean, I could go on. The list goes on. Check out Bybit if you haven't checked them out yet. I don't know what you're waiting for. They continue to outperform and really do better and exceed kind of my expectations there. So thank you, Bybit, for sponsoring the show. Let's not waste any more time, guys. Let's get into this one. I think you will enjoy it. I learned a ton. I continue to learn a ton from Travis and Hans. Hope you guys enjoy the charts and take some value from this. Enjoy the show. See you soon.
Ladies and gentlemen, it's time!
You are listening to the Coinist Podcast.
We should be live. Welcome back to the Coinist Podcast, everyone. Today, I'm joined by Travis Kling and Hans. I've been waiting for this one for a while. Travis and Hans, how are you guys both doing?
Good. That was a better IBU, man.
I like that. In the sound check, one common stat I've been trying to grade past just the content I talk about has been sound checks. And last time I got a little parable from the last trader we had on. You guys both said you were bullish on tacos. What's going on there? Is Ikigai you guys have a lot of taco lunches for the company, or what's going on there?
Look, I was born in Texas, and I now live in Los Angeles, which makes me, I think, more or less a taco expert. So, I was born bullish on tacos, remain bullish.
Tex-Mex, hard to beat it. I like to smoke meat, brisket tacos, burritos, It's there's a whole universe out there. It gets deep.
Mark Zuckerberg, did somebody say smoked meats?
That video is amazing and terrifying at the same time.
Maybe you're
Um, oh man.
We didn't come here to talk about smoked meats, though, Luke.
No, we
Sorry.
didn't. We're not talking about smoked meats. We're going to get into what we talked about. First off, Travis, we met way back in Consensus. Hans, this is my first time meeting you. Absolute pleasure. We're going to dive into a ton of things, both with on-chain metrics, what's been happening recently with Bitcoin with the drop, and also hash rate has been a topic that gets thrown around, maybe a bit of FUD going on there, also as it relates to what we can learn about Bitcoin on-chain. But first off, one thing that everyone talks about now with Bitcoin is this macro narrative. And Travis, you've been beating that drum, I think, longer than anyone. The situation changed in January, and that's when you really started to talk about it. What are your thoughts on the Bitcoin as a macro kind of story or as a macro narrative right now?
Yeah, look, it's been evolving for sure. BTC is a risk asset, but it's a risk asset with a specific set of investment characteristics that become increasingly more attractive the more irresponsible monetary and fiscal policy is from central banks and governments globally. We've been kind of calling for this weirdness in BTC price action that we think started at the back part of July, was exacerbated in August. My monthly update letter that went out September 1st talked about the potential for the weirdness in BTC's price action to be a canary in the coal mine for traditional asset classes. And then sure enough, in September, you had the quant quake momentum unwind. The second week in September, the third week in September, you had the repo market blowout. And then the fourth week of September, right after you had super weak volumes on Bakkt on their first day, then you had Bitcoin that kind of opened up the hatch below, and Bitcoin kind of fell through that multi-month descending triangle. And then, you look at sort of what's happened with traditional asset classes since then. We've had a couple real ugly days here now, big risk off types of days. And the repo market, now we've moved into October. One of the things that folks were looking at was the potential for cash tax payments to be sort of drawing on liquidity for the banking sector. But just today, you had, I think, $48 billion drawn down on the repo facility from banks. So, again, this is like not my area of expertise. I do probably know more about it than the average crypto investor, but I certainly don't know more about it than a bunch of traditional asset class macro guys that do this stuff all the time. And so I don't make calls on stuff like that. I just try and ingest the information as it becomes available on a daily basis and kind of try and make investment decisions accordingly based on a preponderance of evidence. Macro is just kind of one top layer of that. But, I don't know, it seems unlikely that this is the worst the stress is going to be in terms of from traditional asset classes. And so I think that means, to the extent that you see increased level of stress, I think that is bearish Bitcoin down to some price level. And then I think at some price level, I'm not sure what that number is. It may be 7,000, it may be 6,000. I think things would have to get really bad for us to go kind of retrace the full year-to-date move. I wouldn't say it's impossible, but it would have to be like VIX at 35 type of situation. And but I think at some level, probably in that $6,000 to $7,000 range, I think you have enough kind of like how would you put it? Like secular Bitcoin bulls that step in and they're buyers in size at that level, regardless of kind of what the overall macro picture looks like. And whether or not we have to go see those levels or whether or not we've already found a bottom here, I think, in my opinion, is probably a function of what that kind of impending stress looks like from traditional asset classes.
Yep. You mentioned that, that's just one way to look at Bitcoin, or that's just one strategy. there's a lot of things going on, both in the crypto hedge fund space, but also in the traditional. What are some of those different strategies that hedge funds can employ in crypto? Because you're a multi-asset fund, right? It's not just the macro. You also have, quantitative approach. You can deploy some into venture capital. I know Hans is a specialist in looking at on-chain type stuff. What are those different metrics that do make up Ikigai so that we can kind of break into on-chain next? What's the big picture first before we separate it?
Yeah, so our investment framework is centered around what we call our four foundations, which is qualitative research, fundamental valuation, quantitative tools, and event-driven catalysts. And we stand up an active portfolio management strategy on top of those four foundations, go deploy capital dynamically into a few different strategies that sit at different places along the risk-return spectrum. And those four foundations, we've built frameworks around them. We put processes inside of those frameworks, and we built tools to help us execute those processes. Those four foundations generate a couple dozen signals in aggregate, quantitative and qualitative signals, and we just take the preponderance of evidence that we see across those signals and make investment decisions accordingly. I don't know of maybe any other crypto funds that kind of think about the world exactly like that. I know that there are folks that are kind of entirely systematic with automated execution, which a lot of people just call that kind of algo trading or purely quant investing. There's different time frames you can do that over, right? So you've got the higher frequency guys, which high frequency in crypto does not mean the same thing as high frequency in traditional asset classes. High frequency in traditional asset classes, you're talking about nanoseconds and milliseconds. In crypto, you're talking about kind of like seconds at a time. And then there's kind of lower frequency stuff that is still on a more quantitative, systematic and automated approach perspective. In traditional asset classes, sometimes people call that like statistical arbitrage or risk parity. And there's kind of look-alike types of things like that in crypto. We call our strategy quantamental, which is a term that got thrown around a lot at 0.72, just the intersection of fundamental and quantitative investing. Pretty early on in my experience of going down the rabbit hole in summer of 17, when I started understanding like what on-chain metrics were, and it struck me pretty early on that a quantamental approach was probably going to make a lot of sense for this asset class because fundamentally on-chain metrics are telling that's quantitative data that's telling a fundamental story about what's going on chain, which I think is what we're going to talk about today, and it's what Hans specializes in, and we should probably jump into his background a little bit because folks are probably pretty familiar with mine, but probably maybe less familiar with Hans.
Yeah, let's do that. Before we kind of dive into everything on-chain has to offer, so I'm curious on that as well. Hans, how'd you stumble into specializing in this?
Well, kind of by accident. I was just working on my MBA, and I was a software engineer at the time, so a lot of the stuff was kind of up my alley. Just love looking at the data and sniffing out relationships and finding a way to apply statistical models. And part of discipline to help me be able to articulate my positions better, I started writing on Seeking Alpha, and I think that's how I eventually hooked up with Travis. So kind of forced me to be able to better articulate how all the pieces fit together and how to start building models around that.
How many articles did you write on Seeking Alpha, Hans?
I think it was about 80 over there before we got with Ikigai. So pretty good. I was the opinion leader, crypto for my whole 3 readers over there. But no, it was pretty good. Got good introductions. It was good experience.
And I was like, hey, Hans, this is outstanding work. Stop giving it to the whole world.
Stop giving away the alpha.
Yeah.
Oh, that's hilarious. Seeking Alpha is a nice site. I remember when I first moved to San Francisco, I wrote a couple articles there to help get a little rent money. So Seeking Alpha, it's crazy what can come of that. Anyways, the quantamental approach, right? There's no earnings here. There's just a different set of fundamentals, and that's what on-chain metrics in a lot of ways can provide. I think it's kind of a new set of fundamentals for this asset class and for Bitcoin in particular. one of those, well, actually, before we get into any of the on-chain metrics specifically, what is on-chain metrics? Kind of where did it start? I had Willy Woo on as a guest a while back, and he originated MVT. How have things evolved? And this is something that a lot of traders focus on. But Travis, you've mentioned that it's not just for traders, right? This is becoming a thing for holders as well. Maybe Hans, you can touch on that too.
Yeah, I think a lot of the evolution from what I'm aware of, kind of started with like network valuation stuff and like Metcalfe's law, because you had a lot of these information companies that were suddenly capturing value. And when you started being able to sniff out these relationships between users and profits, it started to get really interesting, and people started mapping this stuff onto crypto, especially Bitcoin. And then, you take the similarities that exist in the industry, and you're starting to kind of frame in an approach that, basically says the more adoption we get, the higher the price goes, which makes sense, especially given that you have a scarcity on a number of these, especially when it comes to Bitcoin. So if you have a limited supply and the usership grows, it's basic economics 101 here, supply and demand. You don't really need to get too fancy beyond that. So if you can start quantifying that and building models, then, I think that's how things kind of kicked off. NVT is interesting because you're looking at, kind of the crossover between economics, whereas, the unit of transaction that's being sent is the Bitcoin, which does vary in dollars, but you do see patterns emerging as you go through different market cycles. So I think, Metcalfe's is a good place to start and a good kicking off point for just the idea that if you can quantify network activity and participation, and especially if you can get more granular, it starts to get really interesting. So in that way, it's kind of like a crossover between technical and fundamental analysis. Like you said, you don't have these corporate profits to look at. It's more like gold, where you just have, like a commodity. How would you price corn or any, natural gas? Travis knows about that. But so that's kind of how I think it got the ball rolling, and that's what made me interested in trying to dig deeper.
The most simplistic way that I think about it and trying to explain it, especially when talking to like traditional asset class folks, is like in the same way that there's a relationship between the price of a stock and the earnings per share of a stock, we're pretty sure there's a relationship between network value and network activity.
Sure.
And network value is pretty easy to ascertain. It's market cap. Network activity, there's a number of different ways that you can measure that. Some of them would be like total transactions or transactions per day, or active wallet addresses, or hash rate. So kind of like broadly speaking, if I'm paying $8,400 for Bitcoin today, am I paying a lot or a little? Well, just because the price is $8,400, that doesn't tell you whether or not, that tells you what the price is. That doesn't tell you whether or not you're paying a lot or a little. So you need some kind of relationship to look at, and you can look at the price right now relative to the price historically, or you can look at the price right now relative to the network activity right now, and what that relationship looks like relative to prior periods. So I think at the most simplistic level, that's how I've always thought about it. But like the level of for like a naturally analytical guy, which I am, Hans definitely is. When you see all this stuff, it's like it's kind of heaven for an analytical person. There's so many ways to kind of slice this to try and get a handle on what you're really looking at when you look at the Bitcoin network. And it's fascinating because it's not like anything else we've ever seen before. It's a little bit like these other things, right? It has equity-like features to it. Maybe it has commodity-like features to it. It has currency-like features to it. It has social media network-like features to it. But it's kind of this amalgamation of so many different things. And that's part of what makes it so fascinating. And it's evolving. Hans talks about that a lot, like the evolution of the Bitcoin network. And what is that thing that you say, Hans, about method of exchange and store of like the transition or whatever?
Yeah, I think it's interesting. We have all these monetary terms and this legacy from these other industries that existed before. Market cap is one example, but you also have like the store of value narrative, the method of exchange narrative. And I've started to look at different ways to sort of segment these things into different groups and go like, okay, well, how is it Bitcoin being used as a method of exchange, and how is it being used as store of value? And can you sort of make a ratio of those, or like how much of this group does it, and how would you quantify their activity? So it can get pretty deep, but I mean, I think like Travis said, it's good to start, maybe with the very basics. And I think the mining debacle that you brought up earlier is a very good point, because the hash power is something that I'd like to get into, because I've done a lot of work on that and ran a small mining company for a bit, so I kind of have some roots there.
Well, sure. Let's start with the hash rate then. I don't want to put it off. Let's hit right there. Hash rate's also one of the first things that I think people realize with Bitcoin when you think about what's the fundamental here, right? There's how can I actually try to understand what's happening on chain? How can I try to put a number to what's the cost of creating this thing? Hash rate comes up, and hash rates have been an all-time high, but recently we had this dip, and if you didn't notice it yourself, you probably saw it all over Twitter. What was going on with that dip, and is it something people should actually be worried about? Where are we now?
Yeah, the dip, I have not seen anyone really come out with anything that makes me think that was even out of the normal range of activity. But the hash rate is actually an estimation. We don't know how many computers are mining. We just know how long it takes to find a block. And because of the difficulty, we can use statistics to say this is about how many. But you get a natural variance, from a few minutes or even a few seconds between the last blocks. Sometimes you get a new one. Sometimes it takes an hour or two or more. So when that happens, you see all of a sudden it looks like the hash rate just tanked. But in reality, you kind of have to use moving averages to level that out a bit, because it's not really being tracked in real time. It's something that's derived. So when I think about the hash rate, I first start off by telling people, how to think about the data when it comes to crypto, when it comes to Bitcoin. The hash rate's a great example. I'm looking at a chart right here. This is the average hash rate of Bitcoin and the price, and I've just plotted them over time. And when you look at this chart, it doesn't look very useful, because what you're seeing is just seems to kind of plot along and then suddenly spike up like crazy, which as an investor is not super helpful. But at the very beginning, we need to understand that Bitcoin's a log scale phenomenon. So you simply change the axis into log scale, and you can see the price and the hash rate moving together over time. And it's obviously not an exact science. There's a lot of bouncing around, but it's enough where you can start doing work at it. And a lot of people have said, well, the hash rate just follows the price. That's the end of the story. You shouldn't even care about it. And you're kind of, unintelligent if you do. But I think there's a lot more nuance there than people are giving credit for. And that is this idea of reflexivity, which in its simplest terms is just like the feedback. If you bring a microphone too close to a speaker and it starts getting louder and louder and louder, and you pull the microphone away and it drops off. I think the hash rate and the relationship between the miners and the price of Bitcoin is a game of, give and take. It's a game of confidence. It's a game of investing capex over a long period of time. And with the strong relationship, you can actually do some things. So Travis talked about the price being relative to something, relative to what? It may be relative to a moving average. It may be relative to some other data. But what I did here on this chart, you can see I put the price on the x-axis and the hash rate on the y-axis. And here you can see it kind of wobbles and gyrates around, but for the most part it goes up and to the right. And this is what we call a positive linear relationship. So as one increases, the other increases. But the interesting stuff doesn't stop there, because now that you know that these two things move together, you can use the state of one to try to predict something about the other. And of course, it's never going to give you the exact value. It's just something to give you a point of reference. And so I think about this, as part of identifying the long-term cycles and where the price is now relative to the hash power. Because if you're a miner and you're thinking about, am I going to employ millions of dollars to build a new mine? If Bitcoin goes under, what am I going to do with these machines? It's kind of a big deal, and it takes time to set up these farms. You've got to work with the local municipalities. You've got to find a place with cheap power. Hopefully it's not too hot. Like, it's a very, it's where the Bitcoin meets the dirt, because you're literally in there with a tractor moving dirt to set up these farms. You have utilities, you need the electricity, you need, this is like data center stuff. So to make that kind of a long-term judgment, it's basically a game of confidence. Is the network going to be here, and can I make a profit? So it does tell you something when people are deploying capital. You deploy $100 million into a mining farm, you're going to want to get your money back. So this chart here, what I've done is just tried to predict the Bitcoin price with the hash rate. And you can see that it does give you a very good sense of when the price has greatly outstripped the mining power of the network and when it's way below that.
Yep.
And just by taking the difference between the current price and the predicted price, you can kind of get a sense of when it might be a more opportune buying time versus when you might be near a bubble top. And this, I think, is kind of like level one, just digging into where we at in the cycle and, where might we go from here.
Hans, I'm going to put you on the spot right now. Do you think that hash power leads price or vice versa, or neither?
I was going to ask the same thing. I'm glad you said it.
So I think it's a virtuous cycle. So what happens is, once Bitcoin got to the point where it was so large that you couldn't just brute force it with any other computing network in the world, it added a certain amount of security to it, and that brought more confidence, which brought more participants, which increased the usage, which increased the price, which attracted more miners, which made more long-term investments. So actually, I believe it's a reflexive system. So it's based on human behavior, but there's also this quantitative side to it. So you're seeing that at times the miners are going, we're doing this, and they're building, and there's this lag time, like maybe it takes a year to set up this farm that you invested in. And now as the market's crashing, all this new hash power comes online. And you see that this is a long-term bet that's very expensive to make in the future of the Bitcoin network. And when you see that, it's hard not to be bullish, because you see that people are really putting their money where their mouth is. This is skin in the game. And then, in turn, the hodling and the increased, presence and awareness and all these new companies and podcasts like we're doing now, raise this up and bubble it up in the public's perception. And, so essentially I think it can go both ways. I think that's the reality of it. It's much more complex than people give it credit for.
Another one of the notes you had there is revenue growth. And with hash rates at all-time high, I think that's kind of another way to think about it, past just, a miner or someone that wants to build a facility's confidence in where we're going to be in the future. But revenue growth is literally growing in the industry. And you can kind of think about it, I kind of compare it to like earnings growth for companies, right? We're seeing pretty much revenue growth at an all-time high for Bitcoin. What are your thoughts there? You said you've ran a mining operation too. How do you kind of relate that to what's going on?
Well, this goes back into what I was saying about the cycle. You see the increased revenue, and people want to get on board. They want a seat at the table. But now it's starting to get to where, it's very difficult to be a hobbyist running a couple of machines in your garage. You really need this. You really need cheap energy. You need to be at scale, and so it's something that it's getting much more serious to be in the game and to compete globally. And we have these issues of centralization. So there's more competition, and you've seen large players like Samsung, and there's this battle to be the dominant forces in the industry. But also another thing I think about is using other commodities as a model. We've talked about, me and Travis, this idea of you've got oil and gas, and then you've got the processors, and you've got these other companies that are involved in it. So you've got some people are just going to buy oil. They're buying these futures contracts, and you've got some people who are going to want to invest in Shell. The same token, you've got gold as a commodity. Then you've got people who like to invest in gold mining companies. You got these JV miners, and there's this whole like ecosystem that's evolved around trying to price that in. Like, when do I want to own these miners? When do I want to just own gold? When do I want to get this futures contract? When do I want to be part of this middle processing tier? And of course, I've been thinking more about that because of these recent drone strikes in the Middle East and all this stuff going on. It's a very interesting climate we're in right now. But I think you're going to see that evolve with Bitcoin, because you've got these mining companies that are just starting to get listed. Hut 8 Mining is a great example, and they are listed. They're a Canadian company. They're a TSXV, moving up to TSX. They just got their preliminary, just a press release the other day. So they, kind of on a trial basis there. But after a year, they'll be in that spot. So I think you're going to see more of these miners come online and be tradable. You're going to have arbitrage between, futures contracts, and it's a very dynamic, very interesting business. And I think, eventually mining is a commodity too. Hash rate. So there's going to be a lot of interplay.
Why don't you talk? We were talking the other night about like the different Bitcoin network, the different types of Bitcoin network participants, and how that's evolved over time. Like at the very beginning of Bitcoin's history, it was like, Hal Finney and like 5 other dudes, right, or whatever, and then it evolved to maybe a couple hundred cypherpunks, and that was the entirety of the Bitcoin network. And then it got its first big use case, right? Buy drugs on the internet. And then that kind of exploded it. And we've evolved a ton since then, right? In terms of the different types of Bitcoin network participants. And Hans, talk a little bit about the different footprints that may be left on chain by different Bitcoin network participants, and how that like may be evolving over time.
Yeah, you've got people coming in, obviously like you, Travis, who have experience in traditional markets, and you've got people bringing a lot of money to the table. You've got a lot of traders, but you also have, increasing these groups of, hodlers, and they are each leaving a different footprint on the blockchain. Some of them, you can see their activity more on exchanges, and maybe they're not going to the blockchain as much. Some of the stuff that's changed in recent times, is like this increasing leverage we're seeing on these exchanges. You can leverage up 100 to 1. You don't need to move your coins. And at the same time, we've got these professional custodians. And so, and on top of all that, you've got these layer 2 solutions coming, the whole block size debate, and, all this network stuff. So I think on-chain activity is becoming increasingly, it's becoming increasingly important to look at like what the hodlers are doing. And if you think about what the traders are doing, what the big money institutions are doing, I think more about like what's happening at OTC desks, what's going on these, these order books and the flows of exchanges and all this stuff. But blockchain, I think, is going to become more and more important to think about the hodlers and, the confidence game and the trade-offs that are made there. And that's why, I post a lot about Bitcoin Days Destroyed, which I think is very important, because if you were to ask a question, in the world today, it's one of the things that's so exciting to me. Like, can anybody tell me how many people in the United States today moved their money from Wells Fargo to Bank of America? Or how many people made a US dollar transaction today? Or what the average transaction size was? I mean, like, none of that. I don't know how you would even begin. But blockchain, you can actually do a lot of that stuff. And because of its nature, you can obscure certain data so that it's not like, Travis moved to $10, XYZ. It's an address, but we know how old the coins are there. So judging by how old the coins are, you can start to make assumptions about how are these people thinking and behaving the longer they've been in the industry. So that's when you can start to start to divide up these different groups. And it's an emerging line of reasoning that I think we're far from being able to put the stamp on and say like, this is how it is, because it's also changing. I mean, got these layer 2 that are now in stealth mode. How many Lightning Network transactions were there today? Now we're back in the dark. I don't know. We don't even know how many nodes there are.
Yeah.
We don't know how many Bitcoin is on the Lightning Network, and that's exciting in a way, but it also makes it more difficult to do the kind of blockchain analysis. Like, you've got this, these other protocols also that are on layer 2, and you've got protocols now going between blockchains. I mean, you think about Tether, whether you're a fan or not, or you think it's a risk or it's great providing liquidity, Tether is operating on multiple blockchains. So it's like somebody posted an article the other day, and it's like the number one crypto is now Tether. And it's like, the thing about Tether is it can't operate without the substrate. It just so happens that, things are hierarchical in nature, but, Tether, without the confidence of Bitcoin and without the liquidity of like Ethereum's faster transactions, without all the undergirdings, it just doesn't work. So it's an interesting phenomenon that, the game is really changing constantly. And that's why it's
Yeah.
just a never ending fascination to me.
Yeah, because like with BitMEX, right? You can make 10 Bitcoin act like 100 Bitcoin really easily. And BitMEX didn't rise to prominence until it was really about 2 years ago, and then that accelerated through the back of 17 and into early 18 because everybody was shitcoining in like mid 17 and late 17, and it wasn't really until the kind of alt bubble burst in the first part of 18 that you really saw the kind of open interest and volume start to explode on BitMEX. And you can go park 100 Bitcoin in your BitMEX account, make it act like 1,000 Bitcoin, and do that two ways for a long time. And the only on-chain transaction that ever hit was when you put that 100 BTC into there the first time, right? And now BitMEX is the #1 venue for price discovery. And the same thing can, like directionally, the same thing can be said about, to Hans's point about using Bitcoin as a store of value. Well, like by definition, if you're using Bitcoin as a store of value, then you buy it and then you put it underneath your mattress. And then you wait for its price to, stay steady or rise relative to the price of the other things that you're exposed to in your life. Like that's the definition of a store of value. And it wasn't but 2 years ago when we were trying to get SegWit pushed through that the use case for Bitcoin was for Americans to buy cups of coffee, right? Which is like such a silly thing to think about now. But the evolution of how people think about what Bitcoin's value proposition is, that evolution shows up on chain. And so the fact that transactions per day and the relationship between network value and transactions per day may be high right now relative to that relationship in prior cycles, while simultaneously hitting consistently all-time highs in hash rate. Well, what that tells me is, this looks like an increasingly better thing to stick underneath your mattress, right? And in the context of what's going on with monetary and fiscal policies, that's what I think the kind of compelling near-term use case for Bitcoin is. And I've said this a bunch of times out loud before too. I think Bitcoin's too good at being a store of value right now to be a good method of exchange right now. Because nobody wants to be the Bitcoin pizza guy. And that's okay. That's totally fine. Because, we've got a lot of really great methods of exchange in the United States. And we do want to go bank the unbanked. And I think that's a great use case for crypto broadly. And when I think about making hundreds of millions of people's lives better in a single generation, providing a stable method of exchange in parts of the world that don't have that, that's a really compelling use case to go make a lot of people's lives better. And if you're in Venezuela and you could choose between a Bolivar and a Bitcoin, you'll take a Bitcoin, but what you really want is a dollar. Mm-hmm. And that's when you look at either decentralized stablecoin projects, in some cases centralized stablecoin projects, or things like Libra. Right. And like, it'd be great. Would it be awesome if like the whole world uses MakerDAI and, a decentralized wallet that can be used on a simplistic smartphone, and that saves the whole world that doesn't have a stable method of exchange? That'd be great. But the Facebook complex has, 2.5 billion monthly active users. So, you get a bit of a head start if they end up getting that project off the ground, TBD on whether or not that's going to happen. But, yeah, but it's all of that stuff starts showing up on chain. But at Ikigai, we're trying to generate attractive risk-adjusted returns kind of month in, month out for our investors. And so in the meantime, you have to acknowledge the fact that I think in any given day, without a strong trend in spot buying and selling, I think BitMEX traders can push the price $2,000 plus in either direction, just based on traders getting offsides one way or the other.
Mm-hmm.
But you can't put the end in for a bull cycle without moving a bunch of old Bitcoin. Like, in my opinion. So if you're not moving a bunch of old Bitcoin, price is only going to get so low, and then you're going to start seeing on-chain accumulation, and you're going to know that like we're going to continue to kind of move upwards. So that's why we think Days Destroyed is so compelling.
So this is actually supportive of, I had Delphi Digital on, and that was one of the first episodes actually, and we looked at their UTXO analysis, and I'm speaking with Tom again tomorrow, and all their research pretty much says the same thing of, look, even as we move towards maybe a more centralized world in the exchange space, where who knows if that continues to happen, right? Derivatives are probably going to be more volume in Bitcoin as we move along. It's just what happens in other markets, what happens in other commodities as well. And that is throwing a bit of a wrench in terms of how we can actually track how much Bitcoin's moving. But when they look at macro cycles, when they look at long term, how they kind of predicted or were able to forecast with a high level of conviction that the bottom was actually going to happen in Q1 of 2018, it was because of those Bitcoins that hadn't moved, and they were looking at on-chain action of recent buyers capitulating and those long-term buyers not, them stepping in. And it is kind of those longer-term things that the footprint, I guess, that can't be erased, right? Those are the kind of things that they're looking for. Do you guys see that changing? Like, so as I look in the future, and as derivatives, I do expect to be a bigger part of this industry, is it going to be increasingly harder to understand what's happening on chain, right? Like BitMEX could go away, but someone else is going to pop up, right? And as more volumes and institutions come in, and as this product's more liquid, and as more people are buying and more people participate, it's just going to continue to happen, right? People use Coinbase because it's easy. I know that everyone should hold their coins, but they just won't. How does that, as we move along in Bitcoin's evolution, does on-chain, metrics, do they just get harder to use, or is it just a constant evolution of, we have to assume that this much is locked up on a centralized exchange, and we can't see some of those things?
Yeah, that's a good point about the exchange holdings. I know there's a number of people out there who are looking to break that apart, and there's always a question of, as the supply grows at a declining rate, are more and more coins ending up on those exchanges? And that's an interesting area of study. I mean, I spent a lot of time looking at Willy Woo's charts and thinking about the network momentum and NVT and stuff like that. And it does look like we've kind of entered an era now. And part of that is because we don't know how big the Lightning Network is. Coin age is definitely important, and that's why we look at the Bitcoin days destroyed, and essentially a lack of Bitcoin days destroyed is essentially hodling or accumulation. It can only be those things. But then this gets into the whole idea of fungibility of tokens, because we're quantifying these by coin age. But when you think about it, if certain older coins are having more weight and starting to color this idea of what's going on in the network, you could see a point where someone starts to game theory this out and go, okay, wait a minute. If I were to get some of those old coins, I could maybe do some stuff. I could maybe play some games here. And so there's some stuff coming down the line, with Bitcoin that, like confidential transactions. Is that going to hit? And that's a very difficult thing to answer, because it has to do with, developer politics and things like that, and how it's going to be received. But if you had really confidential transactions, some people see that as completely ideal. And it definitely has advantages, but it also has disadvantages, because then, like you said, we are a little bit further in the dark. And that's hard to predict, so sometimes you just got to look at where you're at now and try to understand how things are changing, and just try to piece the puzzle together. And that's why it's art and science. But that's, again, what I think makes it so interesting.
Sure. One of the other metrics that hit an all-time high, not hash rate, moving away from hash rate for a second, looking at realized cap is one of the first on-chain metrics that I learned about, respected, was interested in, said this makes sense, people should think about this. It's kind of a different way of thinking about the market cap. And in terms of when those coins were acquired, what the cost basis is for those coins. That just hit an all-time high recently, and I think we bounced down when it hit an all-time high. What do you think that means, Hans? What has some of your research shown there?
Yeah, realized cap is really interesting, and when I look at the data, I see that that we are moving into an era where the volatility is decreasing. Even looking at the MV/RV ratio, which is the difference, but the ratio between the market cap and the realized value, you see these bounces, and this bounces a little bit lower, a little bit lower, a little bit lower with each bubble cycle, and the bottoms are kind of coming up too. And I think with the volatility decreasing and some of this stuff, it just goes to show you that people are getting to know Bitcoin a little better, and they're getting a little more comfortable with the analysis, and maybe they're starting to front run it. They know, okay, well, the peak could be about here, so they maybe sell before you get to that peak, or the bottom could be here, so they maybe start buying before that bottom, and they're front running these metrics. But another thing to think about is like the slope of these lines, and if you look at MVRV from 2015 to 2018, nice steady increase. There were bumps and ups and downs, but what happened in the last few months has been just like vertical, the kind of thing we haven't seen since bubble tops in 2013 and 2011. So one interpretation of that is that these signals they are getting front run, and somebody was just like, look, I think the bottom is going to be here, but I'm not taking a chance. I'm getting in now. Buying program turns on, and we get elevated. Traders get caught wrong-footed, and there's a lot of confusion. And from a white coffee perspective, this goes back into the whole trading side of things. You can use these blockchain metrics to think about Wyckoff. How are the whales shaking out the little guy? How are they getting them to play their game and give them more of their coins? And when you can have that much influence over the price, maybe it's not as difficult as people think. Maybe it's not as far-fetched. So I think there's some interesting analysis to be done there.
Yeah, the velocity off the bottom that we had, was pretty historic from like an on-chain metrics perspective. And it like worried us. By us, I mean me and Hans and some other guys that look at this stuff a lot and talk about it a lot. Mm-hmm. And we were all kind of looking at the same thing. And Bitcoin went and, had its fifth best quarter since 2012 in Q2 19. Mm-hmm. And if, we were sitting here 90 days ago, I mean, it looked like it was just going to kind of make a run straight at it, right? Yeah. And the likelihood that we were going to make new all-time highs this calendar year, 90 days ago, looked like there was a real chance. And it looked like it was going to be hard to keep a new all-time high from happening before the halving by May of 2020, because that acceleration had so much, ferociousness to it. And we were all kind of looking at these on-chain metrics and looking at how quickly they got blown out, and by a bunch of different measurements. Some of them are public, a lot of them are on Willie's site. Mm-hmm. A lot of them are proprietary. And we just kind of thought that because people were doing more on exchange and less on chain, and because people were transacting less with Bitcoin because they were realizing that Bitcoin's a great store of value, much more so than it's a great method of exchange right now, that these on-chain metrics were just going to get blown out relative to prior cycles, and that the chart was just, and like if we were going to look back on this in 18 months or 2 years, we're going to be like, oh yeah, because this time around, everything's different than it was the last time. Sure enough, here we are 90 days later, and prices pulled back. How far are we off the top now? 40 something.
40%.
50. Yeah, off the top. And now it's looking like, especially if we go retest 6-7K, we've already had a partial reset of a bunch of those on-chain metrics. And if we go do 6-7K, like there's a good chance we're going to get a full reset of those before the halving. And if 90 days ago, I would have told you there's like no way that's going to happen. And now it's looking like it might happen, which if you think about on-chain metrics is like an indicator of kind of the health of the nature of a bull run, like we may get a chance to get a much healthier bull run than I think I would have thought was going to be possible just 90 days ago. So it's funny how that happens.
It is. Willie said almost the exact same thing when I had him on. Gosh, that was probably mid-run. I think we were probably passing 8 or 9K on the way up, not on the way down like we're talking right now. And he was saying, look, I kind of don't understand how fast this is happening. It doesn't look healthy. Maybe it does keep happening, but I don't think it's healthy. And that's just kind of what he kept repeating. And now that things have reset, that's kind of a nice way to think about it as, well, this time the ascent wouldn't be this new normal of just severely outpacing what we should be seeing relative to what's happened in the past.
All these metrics are relative to the network activity. So, you're looking at NVT or something, all it takes is for somebody to start moving some coins. And remember, NVT is, how much network are you getting for the activity level today? So if the price stays flat, but the activity level increases, it seems more justified. So, there's some dynamics going on there. But yeah, I think it's interesting too, because when you make a metric, you feel very like, okay, do I believe in this? Or like you're identifying with it. You don't want it to be wrong. And then at the same time, you don't want to be blind. So, it's like you sit around second guessing yourself, like,
Sure.
how much can I trust this? And that's where it's important to have a number of different lenses to use and to not be too much of a zealot when it comes to trying to defend one approach or another.
One of with the recent drop, what are you guys seeing now? Talking about the reset, Travis and Hans, we have had a bit of a reset. On-chain metrics are also resetting now because of this. I just read an excellent article from the Coin Metrics team. I believe it was Nick Carter who wrote it, and he was looking at buyers in like the 10 to 13K area, buyers from below 8K, and almost all the selling that happened, like leading up to September 29th after that sell-off, was from the people that had very recently bought, like in the 10 to 13K area. None of like the 8K buyers or those people with a cost basis there were selling. What are your guys' thoughts on this retrace without getting specific in price targets and price forecasts, anything like that? What are you thinking about, how healthy is this retrace, or is this actually, people throw out echo bubble, and that was a bit of a meme a while ago. We are 40% down now. What's your thoughts on kind of the health of a retrace like this after we had, a 3x return?
Take that one, Hans.
Yeah, I mean, I think it's interesting to just go back to the simple idea of Bitcoin days destroyed and destruction. I like to look at destruction in terms relative to the supply. And, you can actually identify quite easily when it gets into psychology. It's like quantified psychology, which is kind of a brain bender. But I mean, when people are deciding to sell their coins, what does it take to get them off those coins?
Mm-hmm.
And you can actually just look at it. It's like I built this chart called adjusted binary Bitcoin days destroyed, adjusted binary BDD.
Yep.
And you can see that there is a cluster of selling that occurs around these bubble tops. And in general, the long-term hodlers understand the game pretty well. And some of them, sure, are just holding straight through the bubble cycle. But some of them are, using this opportunity to cash out near the top and buy it back in when it comes back down. And when you look at the patterns of what's going on there, even on a daily basis or weekly, monthly basis, I see some selling that took place at the peak there, but in general, that is nothing like what you see at a bubble top. So that tells me that importantly, we can quantify that people don't believe that was a bubble top because they didn't behave like they did in the other ones.
Yeah.
And so because of that, I mean, I think you can take surveys all day long and ask people what they think, but this is like quantifiable that nobody believes that the bear market is essentially, most people believe it's over. Sure, some people are always going to go in there and take profits, and I'm not saying you shouldn't do that, but when the majority of the market says, whoa, this is crazy, I'm out, it's a pretty good sign that demand is drying up, and so you're going to have a correction.
Yep. And it just still hasn't happened yet. That narrative, I mean, for me, it hasn't changed. I don't view it as that, but I was kind of curious what the market was showing. That Coin Metrics, their charts were really nice on that side of things. What else did you have, Hans? Were there any more charts that we didn't get to hit in your thread? You had a thread that went pretty viral like a month or two ago, and it was really what caught my eye there. I know we hit Bitcoin days destroyed, realized cap, which I think is massively important. But is there anything else that you've been seeing recently, has been talked about recently with the market? I know hashrate was talked about a lot. Anything else on that side of things, or something that you're working on?
Yeah.
By the way, I just pulled up this tweet thread again. Dude, I didn't realize you knocked down 1.4 thousand likes on this bad boy.
I didn't either.
That's pretty good for followers.
On metrics thread, man. That's awesome.
Yeah, that's with the 3 followers that I have, that's an incredible ratio. I think I deserve more.
Oh man.
Yeah, I'm just looking through this again to see if there's something that we haven't covered yet. A lot of this is active supply.
Ooh, yeah. That's exactly what I wanted to hit. All right, so there's been a debate on Twitter, and this is like FinTwit versus crypto Twitter, which crypto has some tech native people which maybe haven't done as much studying on how news is priced in, whether or not markets are efficient, whether or not if everyone anticipates a news event, whether or not that's priced in. And there's a massive debate going on of if the halvening is coming up and everyone knows about it, does that actually affect price, right? Or is that already priced in? What's your thought there, and on-chain kind of how do you think about that as well?
The further along we get, the less dramatic it is in the moment. I mean, if you think about the first time it ever happened, nobody had any idea of what was going to occur. And so they're like, it's like, what do you do there? You have N of 0. So then it happens. And then you wait 4 years later and you're like, okay, we had Mount Gox. Are we still doing this thing? Is it going to be like last time? No idea. Now you got the third one coming up and you're like, okay, it's been 10 years. It's happened twice. So, I mean, and in addition to that, you've got less Bitcoin. If you look at the annual inflation rate, you see that the amount entering is a smaller and smaller portion of the circulating supply over time. So, there's a lot of people that talk about like, what are the miners doing when it comes to selling their coins? And I think that's becoming less relevant over time because they're receiving less Bitcoin, over time from block rewards. And of course, fees is a whole other conversation. But when I look at it, it's just like, you look at Plan B's model, which everybody, loves to either love or loves to hate. And it's like, I think it's getting priced in, but there's so many other confounding factors. I mean, you got this wacky global macro situation now, these trade wars in China. And I mean, even what's going on with Bitcoin competitors, people are always talking about the Bitcoin dominance rate, and it's really this very complex metric that involves these judgment calls about what should be included and what shouldn't be. So the halvening, it's important because the rules are laid down and it's going to happen like it's going to happen. So people need that. And that just goes back to confidence in the network. Another Bitcoin block is being mined. The rules are being followed. We're moving forward. So in the long term, it's super, super important. But in the moment, I think it becomes less important because it's less of a surprise.
Yeah. So Plan B, stock to flow, I guess the first thing I'll say is it's either right or it's wrong. The math's either correct and predictive or it's not. If the math is correct and predictive, then halvings are stunningly important, right, to price. Or maybe the model's broken, right? And so kind of two conflicting views there. And one of the lenses that I like to think about it through is you have the psychological aspect of the halving and people getting fired up about it and buying in advance of that and buy the rumor and sell the news and whether that's going to happen. So there's a psychological effect of it. But then you also just have the logistical effects of cutting the Bitcoin reward in half. And right now, you're throwing off like 54,000 new Bitcoin a month. So at 10K, that's 540 million new Bitcoin, $540 million worth of new Bitcoin that gets created. That assuming that miners are selling in real time, which you can talk about whether or not that's the case, but like broadly speaking, over time, it's probably a decent rule of thumb. And you got to go logistically find a home for $540 million of new Bitcoin every month. And if you don't, then price goes down, right? And it's something that when I talk to traditional investors a lot of times, especially when I'm talking about Bitcoin days destroyed and UTXO area of analyses, I tell them that like where the manner in which Bitcoin arrives at its price on any given day and how precarious that it sort of like it gets to that price, it's not at all the same way that like Apple stock arrives at the price of Apple on any given day. Like Apple's price today has like billions of dollars of bid on one side and billions of dollars of ask on the other side. And then it's surrounded by the tech subsector of the S&P 500, which has tens of billions of dollars on the bid and the offer. And that's surrounded by the S&P 500 that has hundreds of billions of dollars surrounding it on the bid and the offer. And so at any given day, it kind of arrives here, and it arrives here, and this, that, and the other. Bitcoin's 30-day circulating supply, it's like 9%, right? So you're talking about like $15 billion of circulating supply of Bitcoin that's moved in the last 30 days. And the 7-day circulating supply it's like 3.5% or something, right? And so the actual amount of Bitcoin available to satisfy the speculative demand for Bitcoin on any given day is way more precarious than what I think people realize because they have a frame of reference of thinking about traditional asset classes. And so when you take that, $540 million every month that's got to go find a home and chop that in half with the block reward, then it just really does change the logistics of how that calculus is done. And, MV equals PQ, people like to kind of shit on that now and, for generally kind of right reasons, but something that Hans and I and Willie and a bunch of these guys have talked about a lot for a while is the potential for MV equals PQ maybe being accurate in a vacuum in a second in time to think about the available supply to satisfy the speculative demand and thinking about what the velocity of Bitcoin can be in the world where quants at any given moment are, I don't know, algos are probably 80% of the volume at any given moment. That's like a finger in the air, but like this is a massively quant driven market now. And so all of that is kind of evolving, and I think the halving really does make a difference. So,
yeah, if I can jump in a minute on there, I mean, I agree with what you're saying. I think I probably think in more simplistic terms than Travis does about markets, but every day the price goes up, there's more buyers than sellers. And if you just look at a log scale price chart of Bitcoin over 10 years, you can see it's more likely to go up than down. So when you have the new supply entering, unless half of the buyers disappear on that same day, what do you think is going to happen? Now, because people see it coming, it can get priced in early. And that's why I say I think it's really important in the long term. But like, it's not like on the day it happens, everyone's suddenly crapping their pants going, oh, I didn't see this coming. But in the long term, it's baked in, and it's important, it's critical, and you can't change it. So it's interesting to think about.
Travis, one of the concepts you brought up there with the NV equals PQ, and I haven't thought about this for a while, is velocity of these coins. And, now that there will be less coins coming out right after the halving, does velocity have to increase or, because Hans, you have a couple charts here showing, velocity kind of decreasing before a bull run takes off. How does this evolve, or how do you kind of picture it? Obviously no one knows, but is velocity of coins going to increase when in fact, what if it's acting as a very good store of value? Like you said, no one wants to be the Bitcoin pizza guy. If it's acting as too good of a store of value, how do we kind of get velocity to increase? It's not something we need to solve. If we don't solve it, right, obviously price will just increase to counteract that. But how do you see velocity acting on this run?
I'll let Hans talk about on-chain velocity. The only thing that I'll kind of say along that kind of line of thinking is BitMEX allows you to make 10 Bitcoin act like 100 Bitcoin with leverage, and then algo traders can make 10 Bitcoin act like 100 Bitcoin because they can flip a Bitcoin over and over and over again, right? And they buy, a little bit low and then they sell a little bit high and they just do it over and over again, right? So then, like directionally, like algo trading can make 10 Bitcoin act like 100 Bitcoin and then throw it on BitMEX and make it act like 1,000 Bitcoin, right?
Yeah.
And that's the market that we're in right now, and that's different than prior cycles. So you just, I don't think there was an answer in what I just said. It's more just like, it's something that we've thought about for a long time. Yeah.
Sure.
I guess velocity can be very tricky because, I'm going to come at this from two angles, and this might get a little esoteric. But the first angle is the simple way, and I like to start off there, and that is, how many Bitcoin does it take to buy a Lamborghini? It's a pretty simple question. But if I'm on my way to the Lambo store, and on my way there, I realized that I was going to spend 100, and now it's only 50 Bitcoin to buy a Lambo, I'm like, awesome. I'm only going to spend 50 Bitcoin to buy this Lambo instead of 100. And today it's around 20. So, we're seeing this economic action here. So what just happened was I only had to spend half as much Bitcoin to buy a Lamborghini. Velocity just fell greatly. But I wouldn't say that was a bad thing at all. In fact, I got to keep half my Bitcoin and I got a Lambo. Awesome. When it comes to the more deep, like economic stuff, you get a lot of these people that, I put a number of these arguments on Seeking Alpha with these, concern trolls about the Keynesian economic scheme and why mutually exclusive stores of value and method of exchanges can't possibly exist or work. And Bitcoin has a solution to that. It's very brilliant. One part of it is the fact that you can divide Bitcoin almost infinitely, because essentially it's digital, right? So you've got 100 million pieces. That's a Satoshi. But then you also have the Lightning Network, on which you can divide a Satoshi into 1,000 parts called millisatoshis. And adding more zeros to the end, it takes no effort. So in theory, one Bitcoin can run the global economy. You just keep dividing it into smaller and smaller pieces. So that's half the argument. And the second half is the Bitcoin pizza guy. It was a bummer that he spent that money and now it's like, don't be this guy. But I think Bitcoin is changing the rules of method of exchange and store of value being mutually exclusive. Because when you think about the massive utility potential of the Lightning Network, you can have nearly infinite transactions with a very minimal footprint on chain. And it can be very quick and very cheap. And you can also have the base layer for storage. So it's we don't know what Bitcoin's end destiny is going to be yet, but just for the fact that it has new properties together that haven't been together before, and it's doing what it's doing, tells me there's a chance that we're looking at a whole new era. And so it's very unfair, I think, to say it's never worked in the past, so it's not going to, because Bitcoin is fundamentally different, and it has attributes that have never been combined before. And so, keep an open mind and just think about what the potential is there. And if the numbers kind of start lining up in that direction, I think it's pretty compelling, because this is a very big change, and it's changing the way we think. It's changing the world in a number of very interesting ways.
I like that. I like that as a nice way to wrap as well. I don't know any other on-chain metrics that we can even hit. We covered a ton. You guys' thoughts on both where we sat before this recent drop, where we got to today, and also hash rate and some of these recent topics. Always appreciate the insight, Travis. Hans, incredibly nice to meet you as well, and get that insight that you specialize in with the on-chain metrics. You guys have some other things going on that I'm going to mention, though, before we wrap up. You have the Kana and Katana, which is almost like a Cliff Asness library. It reminds me of. I used to scroll through his site sometimes, look at the research he published. What's that initiative about? Because there's probably going to be people that are listening to this right now, want to follow up with your research or want to track what Ikigai is doing. I imagine that's a good avenue to do that. Travis, what's up with Kana and Katana?
Yeah, it's just our effort to try and provide education to, both the crypto ecosystem and pre-coiners. Because I know that, none of this stuff is particularly bite-sized, and there's a lot of information out there, and people aren't sure, what to trust or where to go and things like that. So we just like the term that we use is shepherds of the technology. Like, we feel obligated and honored to help the world understand what this stuff is, why it's important, why it's worth researching, and planning on doing this for the next 20 plus years of my life. So it's the least we can do. We did the valuation depot a handful of months ago, which we did that just because crypto valuation was a topic that I was super interested in from day one, back to the on-chain metrics. And like, surprisingly, there wasn't like a one-stop shop for, kind of finding all of that stuff in one place. And a lot of non-crypto folks like to say that, like, there's no such thing as fundamental valuation for crypto. And that's just flat out not right. It's just not right. So, and we think that the valuation depot is a good, good evidence of that. And if there's no way that you could read everything on there and at the end of that say there's no such thing as fundamental valuation for crypto. So, yeah, and we just did it different than the website for the fund is ikigai.fund, and we just have to be careful about like making sure we're not like soliciting for the fund. So we wanted to do it like just a separate thing, because like, investing in Ikigai is different than, wanting to learn about the crypto ecosystem. So.
Well, it's been a very positive contribution. So all that info is down below. If you're listening on iTunes or Spotify, pop on over to YouTube, or I'm sure you could find it by searching Kana and Katana. The work you guys put out definitely keeps me learning and keeps me finding new things that I had no idea about with Bitcoin. Your monthly updates are great as well. Subscribe to all those guys. All the info is down below to follow both of them. Follow Hans because his posts are going far more viral than both of ours together. He does incredible work there on Twitter as well. So thank you for both of you for jumping on. This was fun. Glad we got to do it.
Thanks.
I enjoyed it.